This is Alan Bush with ADM in the stock index futures, seeing a little pressure early this morning. Looks like most of this due to retail sales coming in weaker than expected. Although retail sales were up 0.3%, the guess was up 0.6%. We do feel, however, that this market is still headed higher. Even though we are a little bit lower today, I think we can see a move back to higher on the day. Still thinking higher longer term. Also, it still appears to be the interest rate environment that will be the main driver behind higher stock indices over the longer term. Over in the foreign currencies, we are seeing the British pound advancing as housing prices increasing again in May. Also, we had the pound advancing to a 19-month high against the euro currency as pressure bills to increase interest rates in the UK. At the same time, the European Central Bank has been lowering interest rates, so interest rate differentials very much favoring the pound over the euro, and this is a trend that we believe will continue for quite some time. Also seeing the dollar index a little bit lower. There was a blow off to the upside in the dollar last week. We have come off since then. Also, retail sales a bit on the weak side, as we mentioned earlier, a bit of a negative factor on the dollar today. So longer term, we feel that the dollar index is headed lower. The pound is likely to work higher, and the yen is likely to come under some pressure. Also, we have had some recent economic numbers out of Japan coming in relatively weak. So we still feel that sooner or later, the Bank of Japan will be forced to add more accommodation to their banking system, which of course is bearish for the yen. Interest rate markets trading a little bit better. This seems to be a function of the retail sales report that came in on the weak side. However, gains limited by supply, with the Treasury auctioning the 30-year bond today, $13 billion in 30-year bonds. So once this third and last auction is out of the way, I think we can see a move back up to higher, at least to the top of the trading range. Ultimately, we will see breakouts to the upside across the board in the interest rate market complex. And this is a trend that will probably last for several months, possibly through the end of this year. Once again, these are my opinions alone and are not the opinions of ADM or Archer Daniels Midland.